Alright, let's dive into something that's been buzzing in the crypto space lately, and trust me, it's a wild ride. Imagine this, while the market's been on a roller coaster, some players are quietly making moves that could shape the future of certain tokens. Here's the deal, XRP whales have been buying the dip like it's going out of style, even as the price dropped from $2.40 in January to around $1 to $1.20 now. But here's the kicker, they're doing it without pumping the price. What does that tell us? Personally, I think it's a sign of quiet confidence, or maybe they're just playing the long game. What many people don't realize is that this kind of quiet absorption could be the foundation for a future rally. It's like they're building a base, brick by brick, without drawing too much attention. Now let's talk about Ether, because that's where things get really interesting. Ether is currently trading below its realized price, sitting at around $1,900 while the aggregate cost basis is near $2,450. What this really suggests is that a lot of Ether holders are underwater on paper. In my opinion, this is a classic sign of capitulation, when investors throw in the towel and sell at a loss. But here's the twist, Bitcoin and XRP are both trading above their realized prices. So why is Ether the odd one out? One thing that immediately stands out is that Ether's situation might be a canary in the coal mine for the broader market. If you take a step back and think about it, Ether's struggle could be a reflection of deeper market sentiment or even regulatory concerns. Now let's zoom out for a second. On-chain data shows that both Ether and Bitcoin whales have been accumulating during this downturn. But here's where it gets tricky. CryptoQuant warns that we might still see one more leg down before we hit a durable floor. What makes this really interesting is that Ether's below-cost trading is the key metric to watch. It's the only major token in this position, and historically, this has been a precursor to a bottom. From my perspective, this could be the last chance for investors to buy in before a potential rebound. But, and this is a big but, it's also a risky bet because the market could still take a turn for the worse. Now let's talk about the bigger picture. What this situation with Ether and XRP whales tells us is that the crypto market is far from homogeneous. Different tokens are reacting differently to the same macro conditions, and that's fascinating. In my opinion, this highlights the importance of understanding the unique dynamics of each token. It's not just about Bitcoin anymore, it's about the ecosystem as a whole. What this really suggests is that we're in a phase of maturation for the crypto market, where individual tokens are starting to carve out their own paths. And while we're on the topic of market evolution, let's touch on Binance. Binance has been expanding beyond just spot and derivatives trading into areas like real-world assets, RWAs, payments, savings, and yield. What many people don't realize is that this diversification is a strategic move to future-proof the exchange. In my opinion, Binance is positioning itself as a one-stop shop for all things finance, not just crypto. This raises a deeper question. Are we seeing the beginnings of a new financial system, where crypto exchanges become the banks of the future? Personally, I think that's a distinct possibility, and it's something we should all be watching closely. So here's my closing thought, the crypto market is at a crossroads. On one hand, we have whales quietly accumulating and potentially setting the stage for future growth. On the other, we have tokens like Ether showing signs of capitulation, which could signal further downside. But what's most fascinating is how these different narratives are playing out simultaneously. It's a reminder that in crypto, nothing is ever straightforward. So, what do you think? Are we on the brink of a new era, or is this just another chapter in the market's ongoing saga? Let me know in the comments below, and don't forget to hit that like button if you found this analysis insightful. Cheers!